Let's get you updated on our ag commodity trade as we are now in the mid-session. We're going to invite in some extra help from Brian Hoops, the president of Midwest Market Solutions, and he is located in Springfield, Missouri. He joins us right now. Brian, I wanted to take a look at some corn harvest numbers, and of course we had the overall national harvest numbers where corn was just kind of getting rolling, a little bit behind the average pace. But if you look at the state breakdown here, for the states with the biggest corn harvest progress, no surprise, North Carolina leading the pack at 72% done. They're actually ahead of their 5-year average. Now, granted, they did want to try and get ahead of Dorian when it was coming along the shore there. But 72% done, their average is 63. Texas, 59% done. They're pretty close to their average of 61%. Tennessee, 38%. They're actually 3 points ahead of their 5-year average. Kentucky, 26%. They're 2 points behind the average pace. Kansas at 10%. And that compares to an average of 16%. And I do see just on the below the line, we have Missouri coming in at 8% on their corn harvest. But normally they would be 19. And I've been watching Missouri with keen interest here this past couple of months, because it's interesting how the crop development and maturity continues to lag almost more than any other state. And that seems to almost be an untold story.
Yeah, we've been watching it closely as well, and we are lagging, in harvest across the Midwest. The spring wheat harvest is well behind normal. There's too much rain in that area. The harvest progress is behind normal. The winter wheat seedings are behind normal. We're on the 18th consecutive day here in Springfield, Missouri, of no rain. And so you've got a lot of very hot temperatures that expect to be about 95 today. And, producers really don't want to seed their winter wheat into a dry soil with this type of extreme heat. So if we get some better chances of rain, which is in the forecast, we'll pick up that planting pace. The harvest pace will get back to normal in the spring wheat belt, and harvest activity is just kind of getting started across the Midwest. I've talked to clients in Kentucky, Tennessee areas that are going pretty aggressively right now, as their crop was planted a little bit earlier than normal.
I was telling my colleague John Jenkinson earlier this morning that up by the Kentucky-Tennessee border, I noticed we're probably about a fourth to a third of the corn is already out, and the ground has even worked already, as if they're already putting wheat in as a double crop behind the corn. It's just hard to believe that some areas of the country are that far behind and some are that far ahead. Fascinating to see the disparity this year. Let's look at our prices. Everything down on the grain side here today. On the corn market this morning, we started out about 3 or 4 lower. Let's look at where we are now. December down 3 3/4 at 370 1/4. Just hasn't budged very much here. On the soybean trade, we currently have the November contract down 4 at 896, and that's about in the middle of its trading range. On the wheat market, quite a bit of pressure there. Chicago December down 6.5 at 482 1/4. Kansas City is down just under a nickel. Down 4 3/4 at 404 1/4 on that December contract. In Minneapolis, December also turning weak in the knees, down about 1 3/4. Now, it had been holding its own with the spring wheat harvest delays that Brian was talking about, but now it's going a little bit lower too. We'll come back in a moment, talk more with Brian Hoops about what's going on in our livestock trade. We have big surges in the nearby cattle contracts. Why? We'll ask Brian when we come back. We are joined by Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. And we were talking during the break about this surge that we're seeing in the cattle market, kind of a role reversal, if you will, because we had the cattle kind of showing disappointing action earlier in the week, while the hogs were having impressive reversal action to the upside. Well, today, let's take a look at our prices, and I'll show you what I mean. On the live cattle trade right now, we currently have the December contract still up $1.40 at 105.42. The nearby October up 167. It's kind of edging closer to that $100 benchmark again on that nearby October. February up $1.40. Meanwhile, on the feeder cattle trade, as we roll over there, we have the October now up $2.98. Can you say $3? One more tick and it will be. 137.18 is our last trade. November up 207 at 135.25. There it is. October, well, it's now 303 higher at 137.22. These are live quotes. Looking at the lean hog trade, We currently have the October down $1.23, and you have December down $2.40 at 68.28. So what's the deal here, Brian? You say you may have some information on what is driving the cattle market all of a sudden for a change today.
Yeah, well, as we talked off air, it's just a rumor at this point, but there are some talks floating around that Tyson plant in Holcomb, Kansas, will open sooner rather than the January opening that Tyson has given for the trade, and that's seen a reaction in the futures market. You can see the front months leading the direction higher, as that would be positive for a cash trade if it is true. So at this time, it's just such a rumor. And those can be quickly dispelled. But that's kind of what's going around the cattle market, is ideas that this plant will be open sooner and lead to some stronger cash trade. But things we do know, cattle on feed report coming out on Friday, the estimates look fairly positive. Placement numbers well below last year's levels, on feed down slightly compared to a year ago as well. So a better forecast coming up on Friday's report is also adding to the strength in the markets.
Okay, and I think probably everybody involved would be in favor of getting that plant up and running as soon as possible. That would be great news if that was true. Could that also maybe have an impact maybe on the cold storage report coming up and maybe put that in perspective?
Yeah, it certainly can, and I think it's also leading to some spread trade in this hog market. With the cattle moving higher, we may see more demand from the packers for the cattle and less for hogs right at this point. USDA is also making some changes on a more procedural level as far as how they inspect the facilities that could allow more hogs to be slaughtered each week. And so the hog market, I think, is reacting a little negatively to that. But the big thing in the hogs has been intermarket spreading yesterday. Huge gains in December, while October ended lower, and a lot of reversing in that spread today, with December down almost 250 points.
Good point. All right, thanks, Brian. Appreciate it. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And Christina, as you mentioned earlier, we have a new case of ASF in South Korea now, so we have to watch that too.
Okay, thank you. Appreciate that, Marlon.